Good evening, everyone. Welcome to Canara Bank Q2 FY26 earnings conference call hosted by Antique Stockbroking. I would like to thank Canara Bank management team for giving us the opportunity to hold this call. From the management side, we have with us Shri Satyanarayan Raju, MD and CEO, Shri Bhavendra Kumar, Executive Director, Shri SK Majumdar, Executive Director. With this, I hand over the call to MD sir for his opening remarks. Thank you and over to you, sir.
Good evening, all the investor community. We are presenting before you the September quarter results. Sir. Our global business has year-on-year growth as recorded at 13.55% and stood at 26,78,963 crores. Our global deposits also have grown at 13.4% year-on-year, stood at 15.27 lakh crore. Our global advances have grown at 13.74% year-on-year and stood at 11.51 crore. Our operating profit has increased year-on-year at 12.20% at 8,588 all-time high of operating profit. And the net profit also has increased at 18.93% year-on-year, stood at 4,774. Our return on asset has increased 7 basis points from year-on-year and stood at 1.12%. Our PCR further improved year-on-year. It's 270 basis points and stood at 93.59%. Our credit cost has come down at 0.68% with the year-on-year decrease of 29 basis points. Our gross NPA has come down to 2.35%. Year-on-year decline is 138 basis points. Our net NPA has come down at 0.54%. Year-on-year decline of 45 basis points. This entire business, what we have grown at about 13%, is led by our RAM credit at almost 17% and stood at 6.71 lakh crore. Among these RAM credit, retail credit has grown at 29.11%, stood at 2.51 lakh crore. And within the retail, the housing loan grown at 15.25% and stood at 1.14 lakh crore. And vehicle loan grown at 25.58% year-on-year and stood at 23,367 crores. First time during the last 5-6 years, our MSME has grown more than 12%, almost 13%, and year-on-year growth of 12.70% and stood at 1.54 lakh crore. Our earning per share continues to be above 20. That's at 21.01% with a 20.68% year-on-year growth. And our slippage ratio has further down at almost 24 basis points year-on-year and stood at 0.76%. These are all the few of the highlights we are given. In the year starting, we are given some 13 parameters or guidance for this financial year. Out of that 13, 11 parameters we already achieved. Under 2 parameters, CASA and NIM, we are working hard to see that it is also achieved. Of course, NIM, we are finding it little difficulty, but CASA, there is a positive growth from June quarter to this. We are at now 30.69 as against a guidance of 32% for the March. And there is a CASA first time that there is a year-on-year growth more than 10%. These are all the few highlights of the presentation, sir. Now, we are open for any of your questions or the queries so that we can answer you and satisfy you. Over to you, sir.
Thank you, sir. With this will commence the question and answer session. Participants who wish to ask questions are requested to raise hands. The first question that we have is from Mr. Maru.
Hello. Hello, sir. Good evening.
Hello.
Congratulations, sir.
Thank you very much, madam.
Sir, I have a couple of questions. Firstly, on your margins, it's panned out exactly the way you had put it. right? Like last time you had said that I don't see more than 5 basis points, and that's exactly how it has turned out. So from now on, do we expect margins to stay stable or improve if there are no further cuts?
So one more quarter, it may continue to be stable, madam. Thereafterwards, you can say there is some improvement may happen.
Okay. And so, what is your outlook on CASA now? I know that traditionally your bank's CASA has been low, but the system environment for CASA, how do you view it and how do you view your own CASA in that context?
See, when the total balance sheet is growing at 14%, near to 14%, it is a big challenge for us to grow even CASA to match with that, to maintain that percentage, madam. But however, whatever the initiatives we have taken by introducing the new products, new initiatives, introducing the customer relationship manager concept, feedback mechanism, so many initiatives we have taken, business around app, several initiatives we have taken. Because of these several initiatives, first time we are seeing almost about 10% growth in the CASA, and especially SB individuals in year on year absolute numbers we have increased. There is an incremental growth of 20,000 crores. And our retail term deposits also in just a half year, we have grown more than 30,000 crores, which is actually for last several years, it's a record growth in the last maybe 7 to 8 years. So it is giving the results. But again, I'm telling you that we have given a guidance of 32%. We work hard to see that we achieve that our guidance 32%. But definitely when we are growing this guidance, we are giving 32%, keeping in mind that our business grows at 10.5%. But now we are growing at 14%. So we have to work hard to maintain that 32%.
Got it, sir. Sir, my other question is on the new ECL guidelines. So, once they are implemented, what do you see as your run rate of credit cost? Will it be higher than what it is now? How does it work?
No, see, I don't think that it will have impact so much on that credit cost, madam. That much I can tell that we are internally something we are assessed, but already we are working for last 2 years. So wherever there is a scope is there, we are additionally providing even standard assets itself when the SMAs are there. So in the all big accounts, we are providing in the standard assets provisioning itself. So that itself is the nothing but that itself is the actually the expected credit loss, whatever the ultimate the meaning of that. Only the small accounts, anything is there. If you see that our SMA position at 5 crore and above, there is a 7,500 crore. Out of these 5,000 crores already we have provided. The left out is only 2,500 crores. So I don't think that will have so much impact on our either CRAR or on our credit cost, because credit cost, if you see that quarter on quarter, there is a reduction. For implementation, it is effective from 1st March 2027. That means still we have 15 months time. This 15 months time, credit cost may come down maybe around 5.50 or below 5.50. So I don't think that again it may go beyond 1% and all. It will be well within less than 1% only.
Got it, sir, because there will be many accounts below 5 crores, right? And that's the problem. That is where you will have to make stage two provisions, because below 5 crore accounts usually have
No,
early delinquencies.
let me tell you, madam, earlier even entire below 5 crore and above 5 crore, entire combined entity, we used to have around 5% of SMA. Now it has come down below 3%. Now it is only 3%, less than 3% is there. The total SMA position. And SMA 0, there is no such issue. Only 1 and 2. 1 and 2 have drastically has come down.
Okay. Okay, got it,
And
sir.
you should look at that our profits also. No, our profits are growing very comfortably. And even current quarter, we have grown more than 18% in the year-on-year growth in the net profit. This year, we are expecting that our net profits may cross 20,000 crores. Last year, we were at 17,400 crores. So this additional profits, whatever we are earning, all these things will give us a comfort.
Got it, sir. Got it. And sir, I just have one last question in terms of growth. Your growth has been good. Going ahead, do you see it accelerating? I mean, are there any green shoots in October which makes you more confident about growth, say corporate growth or even SME growth?
And actually, MSME, we are expecting that definitely by the end of the year, we may end up at above 15% growth. As on date, it is 12.5% growth. Corporate, already we are growing at 10%. We want to grow around the 10 to 11% only. We don't want to compromise on our bottom lines. The green shoes, whatever is there, just 2 days back, our board meeting, the credit sanction committee has cleared 26,000 crores worth of loans only in one meeting. That gives you an idea that how the proposals are there in our bank. But again, let me say that our RAM sector will grow much faster than our corporate sector, because it's a strategy that we should reach our RAM sector to 60% and corporate sector to 40, 60-40. That is the ratio we want to reach in next 1 or 1.5 year time. So our thrust will continue to be in the RAM sector to grow faster than the corporate credit.
Got it, sir. Thank you so much. Thanks a lot.
Thank you. Thank you, madam.
All parties. The next question we have is from Mr. Ashok Ajmera. So please unmute yourself.
Good evening, sir. How are you? I hope all is well.
Yes, sir. Yes, sir. Good evening, sir. How
Wish
are
you
you,
a
sir? Ajmera, sir.
very happy Diwali and happy New Year. We are very just.
Thank you, sir.
We celebrated a festival just a week back. And
Sir.
compliments to you, sir, for another good quarter, for very good set of numbers, sir. Uh,
Thank you,
especially
sir.
your business growth, I mean, which includes credit and deposit growth. You are little above than some of the other peer banks, which is very heartening to note, which you always have been. And mostly it is all organic credit, organic growth. So, which is also very nice. Sir, you address those two concerns, which are my concerns also. One is that, sir, our excuse me, our CASA, sir, which was 6 quarter back, was 30.98%, is still today at 30.69%. So, something has to be worked on that little more seriously, so as to make our CASA a little higher than, because it is a perennial problem in our bank as compared to some of the other banks where they have anything from 37 to 45%, and some small banks even 50%. So one thing on CASA, our strategy. And second one, sir, if you observe this, NIM is also going down from 2.9% 6 quarter back to now 2.50%. I understand that because of the rate cuts and this thing and the lag effect in the deposit and the corporate credit, credit rates. But then still, where are we heading? And how are we controlling this fall in the continuous fall in the NIM? So these are the two things which I can seek your some comments on that, sir.
Yes, sir. I appreciate your concern in these things, and I am sure that you will appreciate our efforts in the cause, sir. Actually, just 2-3 years back, the balance sheet used to grow at 5%, 4%, 6% per annum. In those days, maintaining the percentage of the CASA at the same level was a little easy task for the banking. But now, because of the credit demand, the balance sheets are growing at 13-14%. And current scenario में 14% to garnering the maintaining the growth in the CASA also is a big task for any bank, not only the Canara Bank and any bank, sir. But still, since we don't want to lose that control on the CASA, whatever it is there, if you see that the first time year-on-year growth is more than 10% in the CASA, and I am sure that our savings bank individual has started giving the results for us. These are all why we are getting the results is we have introduced several segment-wise targeted products, and those products became grand success in the market, and we got very good business out of those special products. And special initiatives also we have taken, like a customer feedback mechanism, relationship manager concept, business around app. Several initiatives we have taken, and these initiatives will continue to focus on that. Now we are working on some other untouched the segments in the society, like a farmers. We want to come out with a new product to favoring that farmers. Then we also want to come out with the Greek workers to target them also to bring it our fold. We don't want to lose any opportunity which gives us a CASA. So we are touching every opportunity. We are trying to exploring that possibility to get those things. And we are sure that I can share with you the absolute numbers because of these initiatives. In just one financial year in savings bank individuals, we got 20,000 crores incremental growth in the SB individuals, which is we never seen in the last almost 8 to 9 years period in the Canara Bank. That means whatever the initiatives we have taken, it has started giving the results, and we are confident that we want to work furthermore and build the strengthen our field functionaries' hands to canvass more and more CASA deposits. We continue to do that, and we allowed recently the opening of current accounts through tab. That also will help them to maintain the TAT immediately. We are also working some more digital initiatives also, and especially in the society side and all. Recently also we have introduced True Edge one CASA product both in SB and current account, targeting for the NGOs, societies or pilgrim centers, so that we can garner that CASA. That also has attracted very excellent response we have received for that product. So we keep continue that's the strategy. We want to maintain that at least the guidance given this year is 32%. Our efforts will continue to meet that requirements, that target whatever the guidance given to that. The second one is NIM, sir. Yes, you are all aware that in the first quarter itself, when the RBI regulator has reduced to the 100 basis points in the repo rate, our 45 to 46% of our loan book is linked with the repo rate, and this repo rate 46% as a benefit is extended immediately, whereas our deposit rates will continue. Almost 90% of our deposits are 1 year deposits. Whatever the deposits we accepted up to April 1st fortnight, those are all the deposits will continue to attract the same earlier rate of interest. That's why there is a stress on the NIMs. When the higher rate of interest regime, we also got